Hi, good morning and welcome to Street Signs. I'm Juliana Tattlebaum and these are your headlines. President Trump hits out at the Fed, calling Chair Powell a major loser, sending U.S. stocks sharply lower and spurring further selling in treasuries and the dollar. European equities follow Wall Street into the red to kick off a holiday-shortened week, but futures point to a Tuesday turnaround ahead of the market open stateside. L'Oreal shares rise for the top of the stock 600 after Q1 like-for-like sales rise 3.5%. But the CEO flags challenging conditions, particularly in the United States. And Tesla shares sink 6% ahead of earnings due today as one analyst warns of a code red moment for the company. A very warm welcome to the program. The top story for financial markets this morning, President Trump clashing with Fed Chair Jerome Powell once again, calling him a, quote, major loser and urging him to cut rates immediately. In a Truth Social post, he accused Powell of refusing to act even as inflation pressures ease. It comes after Trump wrote last week that Powell's termination could not come fast enough, with the White House studying whether the Fed chair can legally be fired before his term ends in May next year. Well, markets seemed jittery on the back of the notion that President Trump could oust Chair Powell and what this would mean in terms of the independence of the central bank. So U.S. markets had a tough day from an equity perspective. The S&P pulling back about 2.4%. The tech-heavy NASDAQ dropped 2.5%, and the Dow Jones dropped 2.5% as well. In terms of European trade this morning and how it's being impacted by that sell-off stateside, well, we are opening for the first time this week in terms of the major markets in Europe, and you do have a pullback in the DAX, the CAC 40, and the FTSE MIB. A little bit of resilience, though, in the UK market with the FTSE 100 trading in positive territory this morning. Now, interestingly, like we've seen for several weeks now, we saw a strong correlation in selling across U.S. assets. It wasn't just equities that saw selling yesterday, but treasuries as well. We saw a steepening of the yield curve in particular, with the 30-year UST yield rising 10 basis points yesterday. Right now, the 30-year trading around 4.91%. Then short out, and at the short end of the curve, you've got the 2-year trading around 3.78%. Dollar crosses. We also had a lot of movement in the dollar, with the dollar index yesterday closing down by nearly 1% to its lowest level in over 3 years. The dollar index now nearly 6% off since the start of April. So really heavy selling in the U.S. dollar continues right now, though we are looking at a little bit of a bounce back. Euro trading about 10 basis points weaker, but we are above that 115 level. Sterling hovering around the flat line versus the dollar this morning, so holding steady around 133.78. Dollar yen trading a little bit weaker this morning, and dollar Swiss franc trading a little bit firmer. So a little bit of a mixed picture this morning. The Chicago Fed President Austin Goolsbee told CNBC he's in favor of a wait-and-see approach from the Federal Reserve, especially with uncertainty around Trump's so-called reciprocal tariffs.
I think our uncertainties at this moment, and why, for me personally, when I hear Jeremy saying preemptive cuts, we're getting announced retaliation. We're talking about revisiting the tariffs in 90 days. And we don't know what the impact on the supply chain is going to be. So I think we want to be a little more the steady hand and trying to figure out the through line before we're jumping to action.
Fed commentary has added to expectations for a hold from the central bank next month, despite President Trump's criticism, with markets now pricing in a more than 90% chance of rates remaining steady, according to the CME's Fed Watch tool. Well, sticking with central banks, we've got some fresh results out of the European Central Bank right now. The latest ECB survey around inflation expectations showing that inflation is seen at 2.2% in 2025. That's up versus 2.1% 3 months ago. So obviously a difference in terms of the outlook there. 2026 inflation forecast at 2% versus 1.9% forecast previously. And we are looking at a slower growth now seen at 0.9% in 2025 versus 1% in the previous forecast. Directionally, all as expected, given what we know about the expected impact, anyway, of President Trump's tariffs. Ian Steely joins me now, International CIO of Fixed Income, JP Morgan Asset Management, to talk through what's been going on in markets. Great to have you on the program.
Good morning.
Well, let me kick off with what we were just talking about in terms of yesterday's market action. What we've seen recently is this sell-off across U.S. assets. It's not just one asset class stateside that's been under selling pressure lately. It's the dollar, it's treasuries, it's equities. What do you make of the fact that we're seeing this high correlation among U.S. assets here?
I think we've had an environment, haven't we, over the last few years where everyone's lent towards the US, whether it's the tech, whether it's stocks, the dollar. US exceptionalism has really been at the front of investors' minds. And I think basically that's being called into question at the moment. Policy in the US, the market unsure about exactly what's going to happen. Maybe we need some diversification around the rest of the world. And we're definitely seeing that flight away from the US into other markets. And whether it's through stocks, whether it's through the dollar, and I think fixed income is really interesting because it's not just we're seeing support for the front end and selling off in the long end, so a huge twist in the curve, which isn't the norm under sort of normal market situations.
What do you read into that twist? What should we take away from that?
I think it's the uncertainty about exactly what is going on with policy. Are we likely to see the Fed have to move quicker? Ultimately, does that cause problems in the long end? Does that mean inflation can become more anchored over the longer term? The market's really trying to get to grips with exactly what's going on. And obviously, all the news that we're hearing around the president and the chairman, that's not helping the situation in that sense.
Well, that's exactly where I was going to go next. It felt like the action we saw yesterday was in response to President Trump laying the criticism on even thicker to Jay Powell, calling him a major loser, Mr. Too Late. What exactly is the concern here when it comes to the Fed? Is it that Chair Powell could be forced to leave before the end of his term? Is it around the central bank's independence and being able to remain independent under a President Trump? What exactly is concerning there?
I think it's a mixture of everything. I think it's huge uncertainty. Obviously, when you go back and look through history, central bank independence is important. And we see that in other economies. The market definitely likes it. Calling that into question is definitely having an impact. And then ultimately, what does it ultimately mean? Because you still got a central bank with the Fed that they are stuck in the middle at the moment. They're stuck in the middle of policy, which is going to create inflation in the near term, probably going to impact growth. That's almost a given. How do you react to that? Do you wait? Do you see the sort of the whites of the hard data eyes? Remember, back in 2023, everyone thought we were going into recession. The soft data was pointing it, and then it never fell through the hard data. So is that in the back of their mind? But also they're sitting at a position where inflation, yes, it's coming down, but it's still above their target to start with. So they are really in a bit of a sticky situation. I think they do end up cutting sort of later on this year, and maybe even more than what the market is pricing. But I still think they're going to be on hold until they start to see that hard data weakening. Because remember, the president could reverse some of these tariffs at any point.
Yeah.
So we've already seen some pullback. And so again, they're trying to deal with all that uncertainty and sort of try to keep a steady ship.
And they could come out with a tax package, which is also, potentially a significant offset. We haven't heard any tangible progress on that front yet.
Yeah, no, absolutely. And I think from at the beginning of the year, everyone was thinking the sequencing would possibly be growth supportive start, and then the negativity would come through. We've obviously had the negativity around tariffs, but absolutely we could have that big tax package, that beautiful bill come through, and then how does the Fed deal with that if that is also going to be inflationary? So it's a really tough spot they're in at the minute.
Interesting. I was reading through some of your latest views, and it stands out to me that you actually think owning bonds here is an attractive option in the current environment. What's the case for owning bonds when all we're hearing is about how foreign investors and domestic investors are losing faith in treasuries here?
So it's not just a case of owning treasuries. I think there are foreign bonds around the world. So if you look at what's going on in Europe, if you look at what's going on in the UK market, I think there's some really good opportunities there. I think, though, actually, when you look at 10-year treasuries, 4.4% or so, from a long-term investment, that makes sense to us. But I actually really like the front end of the curve. That's the bit that's going to be anchored. That's the bit that's going to be impacted most if we do start to see growth slow and the Fed have to go a bit quicker than what the market is pricing. I do think there are concerns around the longer end. So we would stick with steepness in the US and then looking at other markets, particularly in the UK, where I think there is a slowdown coming, and ultimately we should get support there.
Interesting. Can you just flesh out a little bit more what the case for the UK bond market is here?
Yeah, I think obviously it's been the market that hasn't really performed. Inflation is still being very sticky, particularly in the service sector. I think we've seen some good news, well, good news from a bond market standpoint, maybe not from the economy standpoint, but some news around the wage and the employment picture. Inflation's coming down a little bit more than people had been expecting. I think ultimately that could give the Bank of England confidence again later this year to be easing policy. And when you look at G10 rates out there at the moment, the UK does stand out as looking pretty attractive.
I've also been hearing this argument that if the U.S. is being questioned now as a safe haven, of choice when it comes to, essentially all assets, then investors are going to be looking for alternatives here, and not just when it comes to the bond market, but just generally speaking, safe haven countries. And there is a view forming that the UK is a top contender here, that if we are seeing a mass exodus from the US, where are you going to put your money? Maybe the UK is actually, this is an opportunity for the UK.
Yeah, I think there is a bit of an opportunity there. The UK market is reasonably small, though, in the context of sort of global markets. It feels like Europe is going to be the place from a developed market standpoint that will be the biggest beneficiary, given the size of that market and where capital can go to.
In terms of tariffs, do you feel like we are past the peak of the negativity surrounding tariffs, or is it too risky to call that at this stage?
I really hope so. It does feel like that. And I think one of the things that we'd been saying early this year is that we felt the initial tariff announcement would probably be almost the worst. And then ultimately you would then start to get the negotiations and you start to get a bit of a pullback, and we would end at a lower rate. It does feel like we're going through that, but it also feels like it might be 2 steps forward, 1 step back when it comes to that. So it's very difficult to get a real grip as to what is going on. I do think, though, that ultimately it is going to cause a slowing in growth, and it's going to cause higher inflation in the near term, but that should come down over sort of a 1-year period, which ultimately means the central banks will be able to react to it.
And in terms of Europe, you seem to like Europe versus the U.S. here. Where within Europe do you see the most opportunity?
So I think you still, when you look at, again, core fixed income in Europe, you've got a central bank that appears to be willing to ease policy because inflation is coming down. They don't have these headwinds around tariffs causing higher prices in Europe. It's probably going to have more of an impact on the growth side. So that does mean the ECB can continue to go and not be so concerned, not have the same issues that the Fed's got. I do still feel that actually high quality credit in Europe as well, given that we're likely to see this package out of Germany, fiscal support coming. Again, it's going to take time for that to go through, but it should be positive for Europe. And I think a lot of people are looking at Europe at the moment and thinking it is a good alternative from the US. You've got a central bank that is able to be supportive, and it looks like you've now got the largest economy willing to open the purse strings and do some spending. That should be a good environment for Europe.
Interesting. So European credit specifically.
Yes.
All right. Well, great to have you on. Thanks for sharing your views. Ian Seeley, International CIO of Fixed Income at JP Morgan Asset Management. We'll hear more on the outlook for Europe when ECB President Christine Lagarde joins CNBC later today. Don't miss that conversation at 3 p.m. London time. Japanese investment bank and brokerage group Nomura is set to buy Macquarie's U.S. and European public asset management business for $1.8 billion in an all-cash deal expected to close by the end of this year. It's the bank's biggest international expansion since it bought the Asian and European assets of Lehman Brothers in 2008. Elsewhere in the banking world, UniCredit says its deal with Banco BPM remains in limbo. This after the Italian government imposed so-called golden power rules on the takeover, only allowing it to go through if UniCredit fulfills certain criteria. In a statement, the Italian lender said it responded to authorities in Rome, but added it could not take a final decision on the deal at the present time. On an exciting programming note, CNBC Europe is getting a makeover with a brand new studio and a new programming grid. Starting Monday, you can catch Sylvia Amaro kicking off our European coverage from 6 a.m. London time on a new program, Europe Early Edition, and a new look, Squawk Box Europe, with me, Karen Cho, and Steve Sedgwick from 7 a.m. London time. So lots of exciting programming changes ahead. Coming up on this show, L'Oreal reports a better-than-expected first-quarter sales growth, but the CEO flags challenging conditions in the U.S. We'll bring you more after the break.
Interactive Brokers pays up to 3.83% on instantly available U.S. dollars in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 3.83% on uninvested, instantly available U.S. dollars in your brokerage account. The best informed investors choose Interactive Brokers.
The ultimate pre-market morning news show, Squawk Box, CNBC.
Journalism was always the perfect career for me. I've always been an egghead and a nerd. When I'm covering tech, my job is to really take these wonky and complicated topics and distill them down so anyone can understand. Ambition definitely fuels the tech industry. There's still this air of possibility when a new tech product comes out, that it can do anything, that can change the world. There's nothing better than breaking news, jumping on camera and telling everyone immediately what they need to know. I love what I do. No day is the same. I couldn't imagine doing anything else.
Welcome back to the program. Here's a check for you on European equity markets. We are trading lower overall this morning. The Xetra DAX down 0.4%, CAC 40 pulling back by about 0.8. Similar for the FTSE MIB over in Italy. The FTSE 100 a little bit more resilience, up about 13 basis points after yesterday brought renewed selling pressure across U.S. assets, and now European markets reacting for the first time this week after being closed for the Easter weekend yesterday. In terms of the sectors this morning, the gainers out in front, you've got real estate up about 1%, insurance also doing well, utilities, retail holding up okay this morning. On the downside, the sector laggards, we have got technology under the most selling pressure, off about 1.9%. Healthcare also underperforming, down about 1.6%. It is Novo Nordisk, the real underperformer in the market. The stock reacting to some news last week from their main competitor, Eli Lilly, in the weight loss drug space. One of their drugs looking pretty promising, and that's providing somewhat of a headwind for the Novo Nordisk shares this morning. Elsewhere, industrial selling off 1.5%, and construction and materials pulling back by about 1.4%. U.S. futures, here's what's in store for the Wall Street Open today. We are looking at a bounce back. The Dow Jones looking to add back about 287 points at this stage. The Nasdaq looking to gain back about 150, and the S&P also looking to regain some lost ground after yesterday. The S&P dropped 2.4%. The U.S. president met with the CEOs of three of America's largest retailers, Walmart, Target, and Home Depot, to discuss the impact of tariffs on prices. Following the meetings, the three companies issued near identical statements saying they welcome the opportunity to share their insights and look forward to future dialogue. Meanwhile, the latest CNBC All-America Economic Survey has found the majority of respondents view President Trump's sweeping tariff policies as damaging for the U.S. economy. Steve Leisman breaks down the findings.
A plurality of Americans think across-the-board tariffs are a bad idea, with most believing they'll hurt jobs and be worse for inflation. And the public is having a hard time believing there's a payoff at the end of the process. The CNBC All-America Economic Survey finds 49% of respondents say across-the-board tariffs are a bad idea, with 45% feeling strongly about it. 35% support them, and 15% are undecided. So there is some scope for the president to gain some support. Among those most negative on tariffs are Democrats, African Americans, 18 to 34-year-olds, and those Americans living in the urban environment. Most positive include Republicans, rural dwellers, those with income above $100,000, and men 50 and older. Majorities think tariffs hurt importers, the cost of everyday goods, the overall economy, and workers. But by 51 to 37%, Americans say they'll help companies producing in the U.S. Americans have also not embraced the president's concern about our allies representing an economic threat to the U.S. Mexico, Japan, Canada, the EU, and the U.K. are all overwhelmingly seen by the public as more of an economic opportunity than an economic threat. Only China is seen by Americans as more of a threat, but by a modest 44 to 35% margin. It remains to be seen whether it matters if President Trump is out of step with the broad public on tariffs and trade. The president's base backs him on tariffs, believing his policy will yield results over time. But their tariff support is 20 points below his overall support. Democrats overwhelmingly disapprove of tariffs, as do independents, by a 2-to-1 margin. Steve Leisman, CNBC Business News.
Swiss pharma giant Roche has announced a $50 billion investment in the U.S. over the next 5 years. It would cover new R&D sites and manufacturing facilities in several states and create 12,000 new jobs. The announcement follows fellow Swiss drug maker Novartis' pledge last week to invest $23 billion in the U.S. Roche shares under a bit of pressure this morning, down about 0.9%. Now on to Novo Nordisk. I flagged one of the worst performers in the market this morning. Shares down sharply this morning. We're now off about 8%. This after U.S. rival Eli Lilly said late last week that its oral GLP-1 weight loss pill produced similar results to Ozempic in a trial of diabetes patients. Now remember, Ozempic and Wegovy, they're injectables. So now Eli Lilly is talking about a pill, much easier for patients to take. So this is potentially pretty important for the weight loss drug space. Now Eli Lilly says it expects to seek regulatory approvals by the end of the year, and that's why Novo shares are coming under pressure today. L'Oreal Q1 like-for-like sales rose 3.5%, but the CEO flagged challenging conditions, particularly in the United States. Let's bring in Charlotte for more on these numbers. Charlotte, what can you tell us about what L'Oreal's been seeing and what their guidance was for the upcoming quarters?
Well, we see the shares in the green close to the top of the CAC 40 this morning, kind of a sigh of relief there from what we saw, because there is still some resilience when it comes to beauty. The numbers were better than expected, up 3.5% like-for-like on the quarters. They were inflated by some advanced shipments to China ahead of a change in IT system, but even stripping that away, they were still better than expected. So reassuring noise there, but there was a lot of focus on the performance in the US, a market where they were hoping to see a lot of growth this year, helping them offset some of the weakness that continues in the Chinese market. And there things were worse than expected, sales down 3.8% in the quarter after some growth in the previous quarter. They said the company will need to raise their prices to offset some of the tariffs, and they will do this on most of their luxury products. So perfumes, for example, some of their creams that they make in Europe, they said they have some pricing power on those products. So that's why they will increase some of their prices as they need to do. They have built some inventory on some brands as well for the US. So they see some of the tariff impact coming more into the second half of the year. In China, they said things are slightly better than expected, flattish compared to some negative trend in the last quarter. And Europe being resilient, up 4.3%. Here again, back to the Luxe division, that's one that performed the best. High-end fragrances is one that is very much working very well for L'Oreal. They have perfumes for Lancôme, for Prada, for Jacquemus, they have announced recently. And so they said the high-end perfumes are the ones that are doing the best. You can wonder whether that is, some of the aspirational buyers that can't access luxury are moving towards fragrances. There's a new bridge for some of these buyers as well, but that is working for them. So in terms of outlook, they said they still aim to outperform the global beauty market, that they see growing between 4 and 4.5% this year. But there is a lot of question of how tough the second half might be for L'Oreal because of the problems that they've announced already in this quarter in the US.
We've talked many times, over the years about the lipstick effect and the notion that when economic hard times come, some consumers will trade down from holidays, experiences, luxury handbags, and buy themselves lipstick and other things to, make themselves feel good. Is that still valid? And if so, how does it fit with L'Oreal's story given the range of products they now have? You just ran us through some of it. They've got, the high-end luxury fragrances, but at the same time, they've also got consumer products, which is a lot more basic.
Yeah, that smaller indulgence that people might go to in tougher times and, a feel-good effect of those beauty products. Look, because of that resilience, beauty is a segment that has attracted a lot of players, a lot of small disruptors, I guess it's just online, a lot of the big luxury companies that also want a slice of that pie because it's so resilient, and it has been booming over the past few years. But there are more and more questions on how resilient that segment really is. And so that would be the question. We'll see that with L'Oreal coming in the second half of this year, if we see the tariffs come into play and how much we see still some resilience there. They're not completely immune, and we know that. We know when there's a slowdown in China, we've seen a slowdown with L'Oreal. When there's a slowdown in the US, we will see a slowdown in L'Oreal. The question is how much of that slowdown will impact them. Are they less impacted at some areas and some industries as well? And that's what they're looking at the moment. To make themselves a bit more sheltered from this as well, L'Oreal, it's interesting in their strategy under Nicolas Hieronymus, the CEO, that they're looking at other areas. They're looking at beauty in a wider way. And for that, they bought a stake in Galderma, of course, they make some injectables. They made some investments in clinics in the US as well to observe how the beauty market is evolving. And they want to be part of that game potentially further down the line. They're looking at developing some supplements. So they're looking at beauty in a wider way as well, maybe to allow to build for them a little bit more resilience if times get tougher.
Well, fantastic context. Thanks, Charlotte, for bringing us the numbers and that perspective. Now, shifting gears to the geopolitics in focus, representatives from Ukraine, the U.S., the U.K., and France are reportedly set to hold peace talks in London on Wednesday. That's according to Kyiv. The meeting would follow talks in Paris last week and come after Russian President Vladimir Putin proposed direct talks with his Ukrainian counterpart for the first time. Tributes have poured in for Pope Francis, who died on Monday at the age of 88 after a stroke led to irreversible heart failure. The pontiff's body will be moved to St. Peter's Basilica tomorrow for mourners to pay their respects before his funeral is held on Saturday morning. NBC News' Molly Hunter was at the Vatican yesterday and filed this report.
As soon as the news of Pope Francis's death was announced, cardinals from around the world have started making their way here to Vatican City. Now, tomorrow will be the first meeting of cardinals. Not all the cardinals will have made their way to town by then, but the first meeting of the cardinals who are in town. And the papal funeral is expected to be held within 4 to 6 days, and on the agenda in the next couple of days will be the exact date of that funeral, and you can bet that will be on the agenda in the meeting tomorrow. Now, as far as the funeral details, Pope Francis during his life designed a lot of them. This is not going to be a huge state splashy funeral. This will be a pared back funeral, a simpler funeral, a streamlined funeral for a pastor, something more humble than what we've seen in the past. And he's made some of the changes. For example, tonight Francis's body was placed in a single coffin made of wood and zinc, not the traditional trio of coffins of his predecessor. Now, he could be moved actually as early as Wednesday to lie in state in St. Peter's Basilica. And another change, he will not be buried in the Vatican grottos. Instead, he's chosen a different basilica in Rome, Santa Maria Maggiore, a basilica in the center of Rome. It was very close to his heart. He visited often. And then the attention turns to electing a new pope, the secret, mysterious process known as a conclave. It will happen in 15 to 20 days from today, from the pope's death. And as the cardinals come into town, more and more general congregations will happen. There will be formal meetings and informal conversations as well. And then, of course, they're sealed inside the Sistine Chapel. Voting will begin. Black smoke, as we know, once the ballots are burned, means no pope. And white smoke means a new pope has been chosen.
Coming up on the show, UK Chancellor Rachel Reeves heads to D.C. for her first sit-down with key U.S. officials. We'll have more on hopes for a trade deal next.
CNBC. Live ambitiously.
1,500 movie. I don't want this flight to end. This is the game changer seat. Look, it even comes with binoculars.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
Global markets, up to the minute, front page news. Wake up to Frank Holland and Worldwide Exchange. CNBC.
Welcome back to Street Signs. I'm Juliana Tattlebaum, and these are your headlines. President Trump hits out at the Fed, calling Chair Powell a major loser, sending U.S. stocks sharply lower and spurring further selling in treasuries and the dollar. European equities follow Wall Street into the red to kick off a holiday-shortened week, but futures point to a Tuesday turnaround ahead of the market open stateside. L'Oreal shares rise toward the top of the Stock 600 after Q1 like-for-like sales rise 3.5%, but the CEO flags challenging conditions, particularly in the United States. And Tesla shares sink 6% ahead of earnings due today as one analyst warns of a code red moment for the company. We are about an hour and a half into the European trading session. We've kicked off the week on the back foot. European equity markets just getting going after the long holiday weekend. Yesterday, we've got the FTSE 100 bucking the trend up 0.2%. Otherwise, though, it is red across the major bourses. The DAX, CAC 40, FTSE MIB all trading lower. In terms of the sectors this morning, out in front, you've got real estate up more than 1%, the clear leader in the market. Insurance also doing well, up about 1%. And then you've got retail utilities also in the green. On the downside, healthcare coming under pressure this morning. Novo Nordisk shares are dragging that basket of stocks lower. The stock off about 8%. A single stock story there to some degree, given it is being dragged lower by some success from Eli Lilly and some positive signals around their weight loss pill in contrast to Novo Nordisk out on the market with an injectable. So Novo Nordisk down 8% in the overall healthcare basket, down 1.2. Tech, though, is the worst performing sector in the market, down about 1.7% overall. On to U.S. futures. Here's the picture. You've got the Dow, the S&P, and the Nasdaq all poised to bounce back after we saw renewed selling pressure across U.S. assets yesterday, which saw the Nasdaq close down about 2.5%, S&P fall about 2.4% as well, and the dollar index pull back about 1%. So it'll be interesting to watch how the dollar fares today. U.S. Vice President J.D. Vance was in Rome over the weekend, meeting with Italian Prime Minister Giorgia Meloni after her visit to Washington, D.C., followed by Pope Francis on Sunday. The vice president has since arrived in India, where he met Prime Minister Narendra Modi, with the two hailing progress on a potential trade deal. UK Chancellor Rachel Reeves is set to hold her first sit-down with U.S. Treasury Secretary Scott Bessent as part of her visit to Washington for the IMF spring meetings. It comes amid speculation of a trade deal between the two countries, with Vice President J.D. Vance saying last week there is a good chance of an agreement coming soon. William Bain joins me now, Head of Trade Policy, British Chambers of Commerce. William, thanks for joining me this morning. So Rachel Reeves is headed to Washington now in hopes of making some progress on this hoped-for deal between the U.S. and the UK. What message do you think that she should be sending Scott Bessent?
That fair and open trade is a good thing, and that the UK has a very balanced trade record in goods with the US, and therefore I think the conditions are great to get a win-win deal, a deal that can give tariff relief and certainty for businesses in the UK and the US alike. And there are real benefits for both countries in having an effective trade deal from these present times.
How impactful are the tariffs currently on the table for UK businesses? We had a guest last week on the show, Callum Pickering from Peel Hunt, who said the UK is actually pretty insulated from Trump's tariffs, given it's a much more services-oriented economy and the fact that Trump has only hit the UK with a 10% tariff, while the countries around the world, whilst they've had relief for 90 days, are facing much more significant tariffs. Is that a fair assessment in your view?
It's true that 68% of the UK's exports to the US are services, but many of those services depend on the movement of goods. And so if we see continued disruption and uncertainty, exporters being very reticent to send goods over to the US, that will have an impact on services as well. And of course, in the automotive sector, the UK's largest goods export by value, we're seeing tariffs of 27.5% and the prospect of tariffs on auto parts to come. And from the British Chambers of Commerce's members, we're seeing real impacts, real negative impacts of the steel and aluminium tariffs right the way down supply chains. So whilst it's true that the headline rate for many goods is only 10%, for other sectors, there are real concerns.
So what are companies doing in sectors like automotive? And we've heard sort of anecdotal stories, Jaguar Land Rover, for example, pausing shipments to the U.S. for the month of April as they figure out what to do. Are we seeing similar sort of pausing happen across sectors while companies wait and see? And if so, what are the implications for staff retention and hiring decisions?
I think supply chains are under quite strong strain at this moment. The British Chambers produced a trade confidence outlook late last week. And in that, we found in the first quarter of this year, only 21% of small business exporters were reporting an increase in export sales, 27% reporting a decrease. And in terms of advanced orders, the picture is no better, with only 20% of small businesses reporting an increase in export demand and 28% a decrease. Manufacturing doing a little bit better, but overall, a very difficult picture. The uncertainty is really damaging business confidence.
Uncertainty seems to be the name of the game when it comes to, any company that is impacted by what's going on from a trade perspective. You've told us what you think Rachel Reeves should be asking for and what she should be pushing for on this trip to D.C. But how optimistic are you that a deal actually gets done here between the U.S. and the U.K.?
Well, the US has a particular issue with those countries which have a very large surplus in trade in goods. The UK is not in that position. Ours is very balanced, and indeed the US has a modest surplus in terms of trading goods with the UK. So the conditions are right. As you say, our economies are well aligned in terms of strong trade in services. We can see mutually beneficial tariff reduction as well as cooperation on technology of the future and AI. So the conditions are strong. We hope for a deal to be done, but businesses will be patient. They know there's a long way to go in these negotiations, but ending the uncertainty, having relief on tariffs, those would be two major boosts for UK business at this stage.
I certainly take your point that it would be a boost to confidence if we do get a U.S.-UK trade deal. But if the UK gets a deal, it doesn't suggest that the EU is going to be any closer to getting a deal with the U.S. And the EU is arguably the most important trading partner for the UK. So where does that leave UK businesses if US-UK get a deal, but the EU still stands at odds with the U.S. and under such strain? What does that mean for the UK economy?
Well, clearly disruption across the UK's three largest trading markets, the US, China and the EU, would be damaging for business here. We're seeing very strong data from the World Trade Organization that there could be a fall in global trade in goods this year. So not having an EU-US deal would also have a negative impact on the UK.
William, I'm curious your view on whether the UK is facing a major opportunity here, in the sense that global investors are now reconsidering whether they really believe the U.S. is a safe place for their money, whether it comes to investing in stocks, bonds, or businesses, or actual capex. And those very investors and companies may now be looking around the world for alternatives, alternative currencies, and alternative homes for businesses. Does the UK stand as a top contender here? What kind of opportunity lies ahead for the UK? Is that a fair way to think about it? William, I think we may have lost your connection, sadly, so hopefully we'll get you on again and get your take on that question. I think it is an interesting one as investors do consider where to park their money, if not in the U.S. That was William Bain, Head of Trade Policy, British Chambers of Commerce. The U.S. Department of Justice and Google are back in court this week as the antitrust trial over the tech giant's search engine continues. The DOJ is seeking an order that would require Google to sell its Chrome browser. Eamon Javers filed this report.
Attorneys for Google argued in court Monday that the U.S. government's quest to break up the company is too aggressive and would unfairly benefit its competitors. But Assistant Attorney General Gail Slater pushed back on Google's argument that the Department of Justice's proposed fixes are dangerous and irresponsible.
You know what is dangerous? The threat Google presents to our freedom of speech, our freedom of thought, to free American digital markets. You know what is irresponsible? Leaving Google's monopoly abuse unaddressed.
The Department of Justice also argued in court that Google wants to pretend the judge's ruling that it's a monopoly never happened, and suggested the company's arguments that breaking it up threatened privacy and security just don't make any sense. The proceedings are being held before Judge Amit Mehta of the U.S. District Court for the District of Columbia, and they're expected to run for several weeks here, but a decision from the judge is not expected until late summer. For CNBC Business News, I'm Eamon Javers in Washington.
Let's get you a check at U.S. tech pre-market. We are looking at a bit of a bounce back for the tech companies. Alphabet in focus, as you just heard from Eamon Javers. That stock up about 1.3% pre-market. Tesla firmly in focus with earnings coming out later today. That stock up about 0.8%. Apple 1.3% higher. Meta, Microsoft also poised for a bounce back. But of course, this comes after the Nasdaq fell 2.5% yesterday. So tech was under some selling pressure. Coming up on the show, as mentioned, Tesla in focus. Shares tumble ahead of first quarter earnings. They are stabilizing pre-market, but they have tumbled in recent trade. They come out later today. We'll bring you up to speed next.
Prime Infra's growth strategy rests on delivering essential services through critical infrastructure. For instance, in our water projects, we are building a very large water supply dam, the first one in 50 years. That dam relies solely on the watershed that it surrounds. Without that watershed being in a state of healthiness, we cannot collect the water we need, thus cannot serve our customers. Technology and digital transformation are cornerstones when we talk about executing extremely complex projects in complex environments at scale. Digital transformation is about optimizing our operations. It's about servicing our clients better. And I expect both technology and digital transformation to play a role for the very long term in the business on a continuous basis.
Squawk on the Street, CNBC.
Welcome back to the program. Chinese car battery manufacturer CATL says it could offer faster EV charging than its rival BYD, as well as Tesla. The company unveiled a new flagship battery cell, which claims to offer a 520-kilometer range from just 5 minutes of charging time, and said it wants its batteries to become the standard for electric vehicles worldwide. Shanghai hosts, meanwhile, its annual auto show this week, with Chinese car manufacturers making a push to expand their reach globally. Lin filed this report.
A lot of focus on what the foreign as well as domestic automakers will be releasing in terms of new and refreshed models, but we're also tracking the impact that the US-China trade war is having on the broader sector. And yesterday evening, I got to sit down exclusively with the CEO and founder of Hesai Technology, David Lee. Now, Hesai is in the LiDAR sensors space here, which has seen rapid adoption. You've got most of the major EV names like BYD, Huawei, NIO, Li Auto that have adopted this kind of technology and really described as basically the eyes to help self-driving cars perceive their surroundings. Now, David expressed to me in terms of the tariff situation some of the frustrations that both the company as well as his US clients are dealing with, keeping in mind that some of his disclosed US U.S. clients include some of those robo-taxi companies like Zoox, like Aurora. They also supply to NVIDIA as well that use their LiDAR sensors as part of the chip testing process as well. Let's watch.
It's painful. Even though today we have less than 10% of the revenue this year coming from the U.S., but that's 10% of the revenue, and it's a lot of very valued customers we have with a lot of contracts extending into the next few years, right? So you can imagine we both read this from the news, right? And then the discussion is like, how do we deal with it? Then if you boil down to the decisions we make on both ends, you realize that tariff is supposed to balance the trade, assuming that your domestic player has some slight disadvantage in price, probably only price, right? In our case, we are in a position that there isn't exactly a replacement for us.
Given the concerns in terms of the U.S. market, David Lee said that they are very much focused on Europe here and also looking at diversification when it comes to supply chains, saying that they see Southeast Asia as a potential place for a production hub in the next 2 years. And ahead of the auto show, which kicks off tomorrow here in Shanghai, we'll be speaking with plenty more top executives of EV companies as well as those in the autonomous driving space as well. For CNBC International, I'm Lin Lin reporting from Shanghai.
Shares of Tesla fell 6% Monday ahead of its closely watched first quarter earnings report due today. Investors are expecting the EV maker to report just under $21 billion in revenue, a significant drop compared to the previous 3 months. It comes after Tesla reported a 13% year-on-year decline in first quarter delivery numbers. That's the worst quarter since the beginning of 2022. Analysts are also increasingly worried about CEO Elon Musk's involvement in the U.S. government. In his latest note, Wedbush securities analyst Dan Ives urged Musk to take a step back from the so-called Department of Government Efficiency or risk serious brand damage. Tesla shares are trading firmly pre-market. The stock up about 0.7%. As you saw, Tesla is trading higher alongside broader tech companies, so a bit of a sector bounce we're seeing this morning. Tesla kicks off another key week for global earnings. We'll hear from 2 more of the Magnificent Seven on Thursday when Alphabet and Amazon report. While in Europe, we'll get numbers from companies including Nestle, Unilever, BNP Paribas, and NatWest. It'll be really interesting to see what these consumer staple companies have to say, what they are expecting in terms of inflation, and also from the banks, BNP Paribas and NatWest. The bank stocks in Europe have been swinging around wildly over the last several weeks. On the data front, we are looking ahead to flash PMI readings from across the world on Wednesday, with April's figures to the first to include data after President Trump's tariffs took effect. On Thursday, we'll get IFO data on the health of the German economy, while Friday brings new retail sales figures for the UK. 24% of BP investors voted against the re-election of Chair Helge Lund in the company's AGM last week. Activist investor Follow This says the result was due to outrage over the oil giant's climate targets and governance. BP scrapped its climate targets in March after another activist investor, Elliott, urged the company to increase oil and gas production and slim down investments in renewables. Well, Mark Van Baal, founder of Follow This, joins me now. Mark, it's great to have you on the program in such a significant period for BP, and you have been quite an involved investor, very strong, very clear what your views have been about BP. I'm curious what you think this vote does to the future trajectory of BP. Just tell us about the significance of this vote.
Good morning, Juliana. Yes, we have a long-standing history pushing BP towards a more sustainable future. And this is very significant. 24% is a true shareholder rebellion. Also taken into account that the chairman was going anyway. So yeah, investors sent a very strong signal that they're concerned about BP's climate policy, about their governance, and about the influence of a short-term investor like Elliott. Alleged influence, I should say, because they've never been public about it. But they had influence. BP made a panic U-turn on their climate targets.
So what's going to change now? I certainly take your point about how symbolic this vote was, but what's going to actually change at the company?
Now, we hope that Amanda Blank, the non-executive board member who is going to search for a new chair, will take this into account. And she will look for a new chairman who is climate competent, who is transition competent, and who is has a bigger backbone and will not respond to short-term activists so quickly.
Well, one of the interesting things that's happened in the last few years for BP is that they were somewhat bailed out by a higher oil price in the wake of Russia's invasion of Ukraine, which arguably took the pressure off them somewhat when it came to their energy transition goals. Now, a very different story. All of this change is happening at a time where the price of crude is collapsing thanks to President Trump's tariff policies. So could that in itself expedite some of the changes toward the energy transition?
Yeah, we hope so, but it's a pity that it's so late, and that not only applies to BP but for the entire oil industry. They have enjoyed very high oil prices in the recent years since the Ukraine war, and what they should have done is invest these huge profits into the business models of the future, clean energy. They refused to do so. They invested in more fossil fuels, and now they're suffering. So I hope this will be the second wake-up call that they really have to invest in the business models of the future. Clean energy is the future. Technology is getting cheaper. Getting oil out of the ground is getting more expensive. So they have to transition. Otherwise, they will be the codex of the 21st century.
I guess the word that keeps coming up, even as you describe it, is the future. And yes, you may very well be right that these changes are necessary for the future of the energy sphere. But short term, this is a company that is still beholden to shareholders. It is a publicly traded company, and to some extent they are under pressure to deliver nearer term. So how do they balance the need to deliver returns to shareholders near term, to keep investors in the company, to have the money to invest for the future?
Yeah, they have to take the profits for fossil fuels as long as they're there, and then realize that all investments in the energy sector are long term. So if you decide to go to the North Sea to explore more oil and gas, this will take 15 years before there will be any oil which you can sell out of that well. So the oil industry is a long-term industry. They should realize that in the next decade they have to transition, otherwise they will go bankrupt.
What's ironic is that BP was one of the first companies in the energy sector to acknowledge the need to transition and acknowledge the need to diversify away from oil and gas decades ago. And yet they sit here today as one of the last ones to actually execute a strategy that positions them for that future. If you could pin it down to, one or two milestones that have blocked that progress, what would you say it is? What's gone wrong for BP?
What's gone wrong is that they never really tried. They called themselves Beyond Petroleum. They really wanted to look like a clean energy company, but they wanted to stay a fossil fuel company. So even the last years, when they announced for the second time they would go into transition, their investments in clean energy were always less, on average, less than 10%. 90% still went to fossil fuels. So you can't claim to be in a transition if 90% goes to your old business. So that's the problem with BP. They always pretended to be in transition, but they never tried. And now they're punished for that because the direction is not clear.
And when you look out into the broader energy space, are there other companies like BP that you're targeting now?
We're targeting the entire oil industry because we believe that we can only tackle the climate crisis if these companies radically change in the next 15 years. We have to tackle the climate crisis, we have to halve emissions in the next 10 years. And since the oil industry and oil and gas industry is responsible for the bulk of emissions, they have to replace fossil fuels by clean energy. They have the market making opportunities, the brains, the billions, the political influence to do so. We need them to tackle the climate crisis. So they all have to change. But if one or two change, show it's possible, shareholders rewarded, customers rewarded, society rewarded, the others will follow. Somebody has to show that it's possible to transition to a new clean energy system.
The mission is very clear, as you've outlined it. Mark, appreciate you joining us. Hopefully we'll talk to you again. Mark Van Baal, founder of Follow This. U.S. futures are in the green right now. You've got all three of the majors looking to bounce back after yesterday's heavy selling. Saw the S&P pull back 2.4% and the NASDAQ drop 2.5%. We are now looking at green across the board. On a programming note, Goldman Sachs chairman and CEO is joining our U.S. colleagues this morning for an exclusive interview. You can catch that live on Squawk Box at 1240 BST. And we'll hear more on the outlook for Europe when ECB President Christine Lagarde joins CNBC later today. Don't miss that conversation at 3 p.m. London town. With that, I will bid you adieu. That's it for Street Signs. I'm Juliana Tattlebaum. Worldwide Exchange is coming up next.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Global markets, up to the minute, front page news. Wake up to Frank Holland and Worldwide Exchange. CNBC.
On the next Converge, meet rising next generation leaders shaping tomorrow today.
Keep on learning. Never be satisfied with just today's outcome.
It is our responsibility to adapt. However, I think it is also important not to compromise on your values.
Whatever decision we make as a company, we always keep in our mind, what good can this do for our country as well?
Doing good for business and society are not mutually exclusive.
Find out how they're redefining leadership on the next Converge.
Home to the world's biggest population and a fast-growing economy. Is the EV story resonating amongst Indian consumers? CNBC goes inside India to give you insights into the opportunities and challenges shaping the emerging powerhouse. Narendra Modi seeks a historic third term.
Several indicators they cannot afford to look the other way.
It's all part of the normal flow of market forces.
The stories, people and businesses behind its rise. This is your gateway to India.
She's wiping her juice hands on my pants. My name is Josh Gerasitano.
My name is V Farm.
This is what we do during our downtime.
Oh. Wow! The flavor here really, really good.
I drizzle the Nook Mam all over it. She got the watermelon juice.
You don't need to say people can see watermelon.
I got the Cafe Moi. Yeah, it's just a bit salty. Hold on, we're going to get changed, okay? It reduces fatigue, it's good for your skin, and it helps the immune system. I normally have like 5 or 6. I just crack it into a plate and then have it all at once. We always come here. It's probably our favourite place. Wow, this is really good.
Stocks trying to claw back some of yesterday's big losses. Futures right now, as you can see, are solidly higher. President Trump's attacks on Jerome Powell continue to roil the markets, with investors questioning what a potential Fed chair's exit might mean. We'll explore that topic. And Tesla kicks off those Magnificent 7 earnings, the key numbers you'll need to watch when those results cross later on today. It's Tuesday, April 22nd, 2025. This is Worldwide Exchange right here on CNBC. Good morning, and thanks for being with us. I'm Dominic Chu, in for Frank Holland on this Tuesday morning. Let's kick off the hour with a check on U.S. equity futures, and they are solidly in the green right now. The S&P is implied higher by roughly 50 points, the Dow higher by about 310, and the NASDAQ higher by about 192. Stocks are kicking off the week, though, deep in the red following continued pressure by President Trump on Fed Chair Jerome Powell. The Dow, the S&P 500, and NASDAQ ending down more than 2% on the day just in yesterday's session alone. Big technology shares, a big drag on the markets. We're talking names like Meta Platforms, NVIDIA, Amazon, Microsoft, Alphabet, those so-called Mag 7 stocks all falling anywhere from 2 to 4.5%. Checking on those stocks ahead of the opening bell, right now we are seeing at least a little bit of a bounce back try here, a little bit of stabilization, if you will, for those so-called Magnificent 7 names. Now, Apple is faring the best of those Mag 7 names, falling just under 2% in yesterday's trade. And then this morning, those Apple shares are actually up by about 1% so far in the extended trade again. A very different story, though, for Tesla, shedding nearly 6% yesterday. It reports earnings after the closing bell today. And right now, those Tesla shares are up 0.75% in the extended trade. But over the last week, they've shed 5% of their value. Checking the bond market side of things, VIL's very much in focus given all of the macro machinations happening right now with tariffs, with the Fed and everything else. The benchmark 10-year note yield is ticking higher to 4.416%. The 2-year note yield also higher to 3.794%, and the 30-year long bond slightly lower to 4.9%. We're also taking a look at King Dollar, the U.S. dollar hovering near a 3-year low at this point. The dollar index is up about 0.1% to 98.39. But again, we've come a long way. We were at 104 over the course of just the last few weeks here. We're still down about 5.5% on the dollar index. And watching gold shares, gold prices once again, they're again at a new record high. This morning, 34.6380, up about 1%. We were higher than that at one point again this morning. So gold continues that move, that safe haven rise up towards that $3,500 mark. A mixed picture overseas this morning following yesterday's sell-off in the U.S. Juliana Tattlebaum is tracking the early trade on the European side of things. Meanwhile, JP Ong has the action in Asia. Juliana, we will start with you.
Hey, Dom, good morning. Well, here in Europe, we are trading for the first time this week in most markets. Closed yesterday for the Easter weekend, and we've started out on the back foot, although trade is mixed when you look under the hood. You got the FTSE 100 trading higher by about 16 basis points or so. Elsewhere, though, we are seeing red at the index level. The Xetra DAX, the CAC 40, the FTSE MIB over in Italy. When you break it down by sector, though, you will see there is some divergence happening. These are some of the individual movers. L'Oreal, the best performing stock in the market, one of the best performing stocks in the market. It's currently up 3.2%. L'Oreal delivered at the end of last week a better than expected set of numbers, and that stock moving higher as a result. On the downside, in terms of the laggards in the market, Novo Nordisk under the most selling pressure. That pharma stock down nearly 8%, reacting to some better data out of their biggest competitor in the weight loss space, Eli Lilly, which came out at the end of last week. Dom?
All right, Juliana Tattlebaum with the moves out there in Europe. Thank you very much for that. Let's get over now to JP Ong in Singapore for more on the market action as things close up in Asia. JP.
Yeah, good morning, Dominic. And again, we did see stocks in Asia pull back a little bit, but no major sell-offs actually for equities despite that big decline on Wall Street overnight that was handed off to Asia. I do want to start off with the dollar index's overall softness that's really piqued up a lot of interest for currencies in the Asia Pacific, and none more so than the Japanese yen. Intraday today, the Japanese yen actually tested or firmed up below 140 against the greenback for the first time since September, and that caught the attention of many traders out in Tokyo. But despite that, take a look at the Nikkei 225, which did close in the red, but again, intraday losses for the Japanese benchmark were limited in today's session. Ditto for the Kospi and the ASX 200 in Australia in today's session. The South Korean and the Australian benchmarks also seeing limited loss, with the TAIEX also closing down, but by a modest 1.4%. Greater Chinese stocks also looked fairly resilient today. The Hang Seng returning from that long weekend today's session, but actually overcoming an early intraday loss and closing in the green. JD.com and Meituan, though, were the two biggest losers, or the two notable losers, because JD.com continues its foray into the very competitive food delivery business in China, much to the chagrin of market leaders like Meituan. We saw the stocks for these two offers close significantly in the red. There was one bright spot, though, across the Asia Pacific, and that was gold miners from the likes of Zijin Mining in China, the mining unit of Sumitomo, and also the likes of Evolution Mining Australia, all closing 4% higher in lockstep with those soaring gold prices you referenced a while ago, and thus proving perhaps the only reliable safe haven so far in today's across markets so far is the fact that you have to go for gold while we're waiting for a lot of this market uncertainty to unfold. Dominic, back to you, and good morning.
All that glitters, JP. Thank you very much. JP Yong in Singapore with the latest from Asia. Sticking with that global markets trade and the ongoing intensifying Sell America theme within them, the team at Bespoke noting that since President Trump's tariffs announcement, or that so-called Liberation Day, the SPDR ETF, the ticker SPY, is down more than 8%. By comparison, as you can see there, the CWI, which is tracking markets around the world, ex the U.S., is down 2.5% since April 2nd. Now, the S&P 500's performance since President Trump took office is on track for its worst start to a presidency since 1928, when data actually began tracking. So that's something we'll keep an eye on as well. For more, let's bring in Ross Mayfield, investment strategist over at Baird. Ross, we've laid out a number of key themes, I guess, that have been developing over the course of the last several weeks here, notably tariffs, and then notably now the attack on the central bank here in America and perhaps even by extension around the world. What exactly in your mind is the most significant theme to watch for in the markets right now?
Yeah, well, until the end of last week, I would have said tariffs and trade. Obviously, restructuring the entire global trade framework and doing so with such a dramatic tariff announcement on April 2nd would have been the story of the year or potentially the decade. But I think that the threats to the Fed's independence are more important today. I think that the administration would be making a major error by meddling with that. I think there are probably some advisors within the White House camp that are saying so. And if only because I don't think it would help the White House with their goals. I think you would see long bond yields rise. I think you would see the dollar continue to sell off. Obviously, we're seeing a lot of pressure in financial markets from these threats. So I think the threat to the Fed's independence, although maybe still minor, is the story of the day.
Ross, the administration, President Trump himself, has at points in the past become very, very focused on the market reactions that at one point was the ultimate barometer, the ultimate test for whether or not policies were working or not. The president now has shifted his view towards one where the market not necessarily is the end-all, be-all, I guess, judge, jury, arbiter of what's happening with policy. Do we have to worry about that, or is that a tempering effect, at least on the markets in your mind?
I do think you have to worry about it. Part of the reaction to the April 2nd Liberation Day tariffs is that the Trump put, so to speak, was lower or deeper in the red than many. Now, we did see, and there's been some reporting that it was the bond market weakness, the big spike in long yields that got their attention and ultimately, helped catalyze the 90-day pause in reciprocal tariffs. There are some Wall Street guys, very successful Wall Street guys who are in his camp. So I do think that he recognizes that there's a pain point where you can have tariffs or trade spill into more of a financial crisis when you start getting into the nuts and bolts of the Treasury market, what it would do to banking and lending. So I do think there is still a Trump put out there, but obviously the equity market volatility and weakness is not really spurring a huge change in policy. So at least on the stock market, I think it's lower than many expected, but the bond market, the moving yields is the thing to watch here.
The tug of war right now that's happening in the equity markets right now is pretty intense. The idea that you have market capitalization weighted indices that are heavily tilted towards big technology names like Meta platforms like Apple, Microsoft, Tesla, and others, versus this broadening out trade for value-oriented sectors. The cap-weighted ones respond more forcefully. The big tech stocks have not really been leaders here. Is that also a worry, and does that change at all in your mind in the next several quarters?
I think it can change in the next several quarters, but I wouldn't expect it near term. These stocks are technically damaged. They haven't been relative leadership since even before the election, really going back to the middle part of last year. And there are some real headwinds, right? Obviously, the trade and tariff stuff hitting chip exporters like NVIDIA. But DeepSeek, I think, has been forgotten because so much has happened in the last couple of months. But there is a real threat to the spending or questions about the spending that have come over investors. And so I think that these stocks are going to be relative laggards, at least for the foreseeable future here. You've got things like financials, industrials, and some of the defensive sectors working pretty well. So it's not like the market writ large is not working. It's just a much more mixed picture. All that said, I would be buyers of these stocks on weakness. I think that in a world where the near-term outlook is so muddy and so unclear, a focus on the kind of structural or secular themes over the next couple of months is going to really pay off. So it might take a steel stomach, but I think that you add to these AI names on weakness here and just kind of hold your breath for the next 6 months and think about the next 6 years.
And they have been relative safe havens at bouts of market volatility in the past, Ross. Thank you very much. We'll talk to you soon, sir.
Thank you.
All right, a lot more here to come here on Worldwide Exchange, including the one word that investors need to hear today and the top investment idea that every investor needs to know today. But first, much more on the Trump pressure campaign on Powell and the Fed and what a potential exit by a Fed chair could mean for the markets and your money. Plus, President Trump's trade war with China not seeming to dent business for China. Beijing not really feeling the pain yet. Why our next guest calls China's latest provocations more bark than bite. And then later on, the kickoff to the Mag 7 results with Tesla after the bell today. A look at whether the EV giant can get that stock back on track. We've got a very busy hour still ahead when Worldwide Exchange returns after this commercial break.
CNBC. Live ambitiously. The ultimate pre-market morning news show. Squawk Box. CNBC.
I see ambition as enriching your entire life, your financial life, your personal life, and the lives of people around you, your community. My ambition is to build people up.
So this is the best dish to me in Vietnam. Good childhood flavor.
Hi everyone, my name is Thủy Tiên and welcome to Ho Chi Minh City. Lotto is the name of the game, just like bingo in America.
Vietnamese people drink coffee every day. If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. Bitter. I think it's quite hard to the foreigners to imagine what they have in Cơm Tấm. You can find a lot of different kind of seafood here because we have a long coaster. It's like the time when you feasting and socializing with your friends and family. 1, 2, 3.
At least more complexity into an already complex trade discussion around the world. What exactly does it mean when China says, don't take sides against us?
Good morning to you, Dom. Look, I think when it comes to China's concerns, it is that they're going to be completely encircled and contained when it comes to economics and trade. That's the one big fear that they have. And Dom, I think the important thing for other countries, in particular some vulnerable countries, which we can discuss, to hear here is that China will not allow for these 90 days of reciprocal negotiations with the Trump administration to somehow harm China's interests. And they were very clear about this rhetorically, Dom. I think that the Chinese right now are barking much louder than they hope to bite because their diplomatic strategy here, Dom, is to paint the U.S. as the trade bully, the unreliable partner. And so China coming in hard with sticks, I think, undermines its carrot strategy for diplomacy.
You know, DeWardrick, in a prior life, you served with the Defense Department during the Obama administration. I wonder from a strategic standpoint, you can look at this economically, but you can also look at this from a U.S. national security standpoint. How exactly does the global hegemony race, I guess if you will, right, Cold War version 2.0, you pick sides either with China or the U.S., how exactly does that play out with regard to policy from not just an economic perspective, but from a defense one over the course of the next several, call it months and quarters at this point?
Yeah, this is a very good question, Don. Let me start with a baseline in terms of what I heard frequently every time we engaged any country, but particularly countries in Southeast Asia and in the Pacific area. They do not want to be forced to choose between the U.S. and China in any sort of scenario, economics, geopolitical. And so you constantly heard this refrain that we do not want to be forced to choose. But I think, Don, we're reaching a point now where who they want to side with. But this is a real pain point for many countries, particularly in Southeast Asia, who I think is sitting at the apex of this battle between the U.S. and China at the moment.
How exactly does it play out from a economic or company perspective, right? We talk about some of the names with exposure to Chinese markets, to global trade in general. Does it mean then that countries in certain parts of the world will either have to use different companies from, say, China or the U.S.? And by extension, do consumers in those countries then have to start thinking about how they want their respective governments to either reward or penalize certain foreign entities?
Well, you know, back when 2018 or so, Dom, and certainly throughout the Biden administration, you started to have this strategy of in whatever country for that country. But that's difficult for many businesses to maintain. But I think we may be looking at a situation where supply chains are going to be heavily localized or regionalized, and companies are going to have to adjust to that. Because I think for the U.S. in particular, you know, 46% is what Vietnam would be charged if they can't cut a deal with. 145% of goods coming in from China. I mean, those numbers are just incredible for consumers to absorb, for businesses to absorb. So we're going to have to figure out in this new era how supply chains are restructured. And I think, unfortunately, Don, for some time it's going to be chaotic, but over the long run, we may see greater localization in terms of supply chain, greater regional trade versus trans-Pacific or transatlantic type trade routes.
All right, a paradigm shift possibly in the making. Dwardrick McNeil, thank you very much. We'll see you soon, sir.
Thank you, Don.
All right, and tomorrow on Worldwide Exchange, right here on this program, we're going to talk the European side of President Trump's trade wars with the region's commissioner for trade. That's a big conversation right here tomorrow. Keep it right here. Now, still on deck for the show, another foreign company potentially at the center of President Trump's tariff policies, opening up its wallet, making new investments in America. We've got the details when Worldwide Exchange returns after this.
Hello, everyone. I'm Julie Sweet. Welcome to another edition of Reinvented with Accenture. Today is a very special episode. Normally, we're talking about reinventing a company. Today, we're talking about reinventing a country.
Payments have to be fast, they have to be secure, they have to be convenient, and they have to be inclusive. Those are things which are not negotiable. And when you think about it, there is no single commercial transactions which doesn't rely on a payment at some point.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
Next on Unlocked, dramatic renovations.
I'm not sure we would have done the renovation in the beginning if we'd have known what it was going to take.
Three friends bought an abandoned high school and transformed it into this apartment building. A couple turns an absolute wreck into their dream home, then say goodbye to electric bills. A 117-year-old house gets a total recharge. Now it unlocks more energy than it consumes.
Getting rid of gas and moving to a completely electric building.
Next on Unlocked.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Squawk on the Street, CNBC.
Amazon and its investors may feel a bigger squeeze by the White House trade policies. We'll have that story when we come back after this.
CNBC. Live ambitiously. The ultimate pre-market morning news show. Squawk Box. CNBC.
There's a difference between ambition and greed. Greed is wanting more. Ambition is wanting better. And not just better for yourself, for your family, for your community, for your country. There's no reason to want CNBC if you're not ambitious, right? If you don't want better insights, better returns. And that's not just financial, though money is a part of it. We're talking about value.
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI.
The age of AI is now.
She's wiping her juice hands in my pants. My name's Josh Gerasitano.
My name is V Farm.
This is what we do during our downtime.
Oh. Wow. The flavor here really, really good.
I drizzle the Nook Mam all over it. She got the watermelon juice.
You don't need to say people can see watermelon.
I got the Cafe Moi. Yeah, it's just a bit salty. Hold on, we're going to get changed, okay? It reduces fatigue, it's good for your skin, and it helps the immune system. I normally have like 5 or 6. I just crack it into a plate and then have it all at once. We always come here. It's probably our favourite place. Wow, this is really good.
Now up a solid percent, but at one point we crossed over that 3,500 big figure level. 3509.90 is your new intraday record high for gold prices. The dollar continuing its slide, maybe adding to that gold trade as President Trump's attacks on Fed Chair Jay Powell further erode some investor confidence in the U.S. economy, and along with treasuries could be fueling that so-called sell America trade. The dollar hitting a fresh 7-month low versus the yen, almost a 3.5-year low against the euro, and a nearly decade low versus the likes of the Swiss franc. President Trump is ramping up his criticism of Powell on Truth Social yesterday, demanding he cut rates, quote-unquote, now, and calling him a, quote-unquote, major loser after Powell said last week the Fed can be patient until it's clear tariffs will not stoke a new round of inflation. The prospect the president could try to fire Powell is leading some investors to rethink their positioning within assets. Trading firm Pepperstone is putting out a note just yesterday saying that the move would lead to the, quote-unquote, most dramatic rush to the exit from U.S. assets that is possible to imagine, end quote. The author of that note, Michael Brown, joins us now to discuss what's going on. And Michael, that is a lot to unpack and a very dramatic tone to take. What exactly in your mind does that so-called Powell exit trade look like potentially for U.S.-based assets?
Well, good morning to you, Dom, from London. I agree it is dramatic, but I think that really does describe the likely market move that we would see if Powell were to be ousted. Now, I think perhaps participants aren't necessarily taking Trump's threats quite seriously enough on that front, given how he is a little bit akin to a dog with a bone. When he gets one of these things in his mind, he doesn't tend to let it go. And if we were to see the president threaten the independence of the Fed as an institution like that, you're really talking about the haven value and the reserve status of particularly treasuries and the US dollar being eroded very significantly in very rapid fashion, probably forever, because once that institutional trust has been demolished, it's almost impossible for it to be rebuilt again over any sort of realistic time period.
Michael, our sitting Treasury Secretary, Scott Bessent, has echoed what pretty much every Treasury Secretary before him has echoed, that the U.S. is still the world's best market, that the U.S. dollar is still a reserve currency, and that we are still the place that people turn to when it comes to the deepest, most liquid markets, and that the U.S. dollar should be a strong currency. All of these things are coming from the administration. So is there any real fear that the U.S. would lose its reserve status or that treasuries would become a less desirable asset?
Well, I think there is, because for the time being, at the very least, the actions of the administration don't appear to be backing up the words of the administration, certainly the Treasury Secretary in public. And as you alluded to earlier on, we've seen this sort of sell America trade take place for a number of weeks now, where treasuries are losing ground, the dollar is rolling over, and participants are rotating into other geographies around the world. Now, I think it's important to recognize that this sort of paradigm shift is something that wouldn't take place overnight or wouldn't take place in a couple of trading sessions. It's the sort of change in environment that would pan out over months, if not years. And also, of course, it's not just the matter of is Powell going to be fired or not. There's also the consideration of who replaces Powell as the next Fed chair and what degree of independence do they have from the administration. I think that's something else that participants are going to start to consider in quite some depth later in the year when we get some names in the hat as to who might take over come next May, assuming, of course, Powell serves out his term, as I think he probably will.
Let's say hypothetically there is this kind of move, this kind of shifting view about exerting political pressure on central banks. It may not just be here in the U.S., right? You could, if this hypothetically becomes successful, could you see more political pressure brought to bear in other central banks and political regimes around the world as well? Welcome back to Worldwide Exchange. Time now for your morning call sheet. A number of coverage initiations on CoreWeave, which went public last month. Morgan Stanley giving it an equal weight rating and a $46 target price. Barclays going with an overweight rating and a $48 target. Goldman giving it a neutral rating and a $54 target price. Goldman, by the way, is also downgrading Macy's to neutral with a $12 price target. It says that sales at department stores historically and consistently underperformed during economic downturns and believes the current environment warrants some caution. And Wells Fargo is downgrading UPS to equal weight and cutting its price target from $120 down to $98. It sees elevated risks from tariffs and the elimination of the de minimis exception on lower value foreign shipments to the U.S. Well, Amazon is one major company that could take a hit from President Trump's tariff policies, but it's not just from the e-commerce side of things. The Wall Street Journal is reporting that Amazon has quote-unquote cost support agreements in place with vendors to ensure it makes consistent margins on products it buys from them, shifting much of the financial burden from tariffs onto the suppliers themselves. Kate Rooney looks at other key parts of Amazon's business that could feel the pressure from tariffs and policy.
Hi, Dom. So the first area for Amazon is advertising. It is an increasingly large part of the company's business. It's been a big part of the bull case for Amazon stock. Raymond James this week calling it out as one reason for the price target cut and a downgrade for that stock this week. The firm points out that 30% of Amazon's online gross merchandise volume and about 15% of all advertising on Amazon is linked to China. It's about $8 billion of a hit if you look at that on a dollar amount from advertising. Ray J sees potential headwinds and Amazon needing to also build out their
The stock has essentially done a round trip from where it was in mid-October prior to the election, had this huge run-up where it peaked at almost $480 in mid-December and is back down to where it is in mid-October. So it's been a roller coaster ride. As I mentioned, we're forecasting a 10% drop in sales. We don't think investors are fully appreciating the fact that the positives here, which are the company has the strongest gross margins in the industry. It has an investment-grade balance sheet that's flush with cash. And we think it has a catalyst ahead in terms of the launch of unsupervised full self-driving in the Austin market in a couple months. So, I think, Tesla really needs to reassure investors regarding demand for its vehicles and regarding its product pipeline. The company's done a really good job keeping investors focused on longer-term catalysts and sort of ignoring the noise and the challenges that they're facing in terms of EV demand and pricing. So we'll see if they can do that once again this quarter on the conference call.
Garrett, really quickly before we let you go, how just competitive is the environment for Tesla going forward, even without the brand image issues?
Extremely competitive. They've been losing market share across their three major markets in the U.S., in the EV market. They've been losing market share for the last few years. You're seeing it in Europe, big year-over-year drop in sales. And then in China, of course, the market is extremely competitive among domestic EV manufacturers. So their market share losses is at the top of the list in terms of concerns here.
All right. A 43% decline so far this year-to-date period. Garrett Nelson, good luck this afternoon with those results. Thank you.
Thank you.
All right, coming up on the show, the sector our next guest says investors should utilize to find protection in the ongoing market turbulence. We'll reveal it, but I kind of just did. Coming up next.
Live ambitiously. We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
If you're really ambitious, you don't think about the end goal. You're too busy thinking about the process of getting there and the growth that you need to achieve. And nothing can beat that.
Likely to be less assertive given the circumstances. And on the fiscal side, we're actually seeing some fiscal constraint as well. So again, that leads us to the view that the upside, even though we likely have it on the very short term, is likely somewhat capped.
Keith, it sounds very much to me like you're cautious. So let's take us through now your word of the day and why.
Correct. We are cautious. Our word of the day is defense. So as we get these bounces from these oversold markets, we would suggest at least being moderately defensively positioned. And that's what we're doing. By the way, Dom, I know a lot of times people want to talk about red light, green light, all in or all out. We're not saying that, but we're just saying relative to long-term equity targets, we would be somewhat below that, given in our work, which is more of a mixed risk reward. And we do think the economy is certainly slowing and likely to hit some type of air pocket later this year as we do all this front running of inventories and so forth. And at the same time, we haven't really seen those forward earning estimates cut yet, which we think there's more to come on that side.
And Keith, before we let you go, your favorite sector out there, given your defense word of the day.
Well, you gave it away a little bit, Dom, but it's utilities. And I think in a world where you have tariff risk, utilities are less influenced by that. Also, in an economy that's likely slowing, we expect more stability on the earnings side. The technical trends are relatively positive as well. So not going to be a gangbuster on the upside, but on a relative basis during what we think will continue to be a choppy market and has a 3% dividend likely to outperform in our view.
All right. Keith Lerner, Truist Wealth, thank you very much. We'll talk to you soon, sir.
Thanks, Tom.
All right. So here's what to watch today. We're going to hear across 5 Fed officials across the day, listening for fresh commentary on President Trump's pressure campaign on the central bank and Chairman Jerome Powell. On the earnings front, remember, we needed to get on 971 points back on the Dow. So the Treasury side of things, the 10-year note yield, 4.41%. Keep it right here. Squawk Box picks up the market coverage starting right now.
Good morning. Futures pointing to a bounce for stocks. Dead rock bounce, 300 points, but we lost 900. And it was worse than that. It actually closed off its worst levels of the session yesterday. There were 1,000-point-plus losses through a lot of the session for the Dow. And that follows, as we said, 2% losses yesterday. Investors nervous about the economy. President Trump's attack on Fed Chair Jerome Powell. We're at 440 on the 10-year again. And gold rising to another record this morning. And Tesla set to report first quarter results. We're going to talk about what's at stake for Elon Musk's company. It's Tuesday, April 22nd, 2025, and Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. This morning I'm in Houston at the Chevron Leadership Initiative's co-mission Champions of Women in Sport event. This is a gathering of business leaders ahead of the Chevron, which is the first major tournament of the LPGA Tour. Over the course of the show today, we're going to be speaking with professional golfer Stacey Lewis, LPGA Hall of Famer Amy Alcott, also Goldman Sachs CEO David Solomon, and Chevron CEO Michael Wirth. This is a moment in women's sports where you're seeing lots of money going into it and lots of interest along with that. We'll be talking about all those things through the course of the morning. Let's also take a look at the U.S. equity futures this morning. As Joe mentioned, we're getting a little bit of a bounce back, maybe emphasis on little there. Dow futures are up by about 300 points. As Joe mentioned, you saw the Dow off by close to 1,000 points yesterday, closed down by more than 900. It was the worst day for both the Dow and the S&P that we've seen since all the way back to just April 10th, so we are getting a little used to this volatility. NASDAQ futures this morning up by 167 and the S&P up by 46. All of this happening yesterday as President Trump ramped up his attacks on Fed Chair Jay Powell and Fed independence. In a morning post on Truth Social, President Trump called Powell Mr. Too Late and a major loser, and again called for Powell to lower interest rates. Let's check out those Treasury yields this morning. Those yields were on the rise yesterday as equities fell, and you can see this morning that the 10-year's at 441, the 2-year's back at 3.8%. You've also got gold coming off its 23rd record settle of the year. It's now closing in on its inflation-adjusted all-time intraday high of about $3,589. This morning it's up another 1.3% to $3,469. Gold hit that record level on an inflation-adjusted basis in early 1980. Yesterday, the dollar continued to weaken. It hit its lowest level in 3 years, and you're going to take a look this morning. It's a little higher, only up by about 16 cents. And then you've got Bitcoin, which yesterday was higher, and this morning looks like it is up another 1.4% to 88,522. Guys, these moves have been really interesting to see equities weaken, to see the dollar weaken, to see yields rise. At the same time, you've got gold hitting these all-time highs. There's a lot of people wondering what exactly this all means.
I think we're still wondering what this all means. Except not. We know what great. We know not great things.
We know what it looks like it means, and that's a Sell America trade, which is I don't know how long it lasts and how it gets reversed. Journal has a good piece today. Best thing to do is get a couple of trade deals done and move on and do the other things that you were planning all along, and hope that hope we can, I don't know, reset a little bit, because definitely a lot of these things are not being taken positively by the market. That's an understatement. Obviously.
He doesn't seem to be doing that at the moment, unfortunately. I mean, he seems to be doubling down.
On who's in his ear. He could, you know how quickly he can change. You ever heard of Poppy's Pond, Becky?
I have. Amy Alcott was the first one who jumped into Poppy's Pond. She's going to be here. And by the way, she's a huge Squawk viewer. She's very excited to be on with you, Joe, and you, Andrew. She asked specifically about each of you last night when I was talking to her.
Awesome.
She's super excited to be here for this. She's an investor herself. And
is there a new pond in Houston to jump in? Because that was at the Dinah Shore.
There is a pond in Houston. It was at the Dinah Shore, and she jumped in Poppy's Pond and created this. She's the original jumper, and she's the one who created that tradition.
What about if you and Mike Worth were to jump in at the end of the show?
Holding hands, holding
at the end of the
nose.
show we can get the whole... No?
I don't think it's nearby. How far away? It's not. You're not at the. Are you near the
I'm about 40 minutes away from the Woodlands, which is where the tournament's actually being held.
It's a great shot wherever you are, by the way.
It is nice, yeah.
I'm at the Post Oak Hotel, which is a really fancy, big hotel. This is where this conference is being held today. And guys, I will also tell you, there's a lot of sports in this town right now. This is also where the Golden State Warriors are staying, because they're playing the Houston Rockets. They won 2 nights ago. Last night, from what I heard, just picking up the rumors around here, they all went to the Astros game, I think.
Golden State
and they
won.
play again tomorrow night.
Golden
State won.
Yeah.
Yeah.
I know I lost.
Golden State won. They're the team that's staying here in this hotel.
Right.
They won. They're playing again against the Houston Rockets tomorrow night.
Because I had
lose.
Yeah, I lost. I had the Knicks the other night, not last night, but the other night when they had a big win. I don't know. Let's not talk about that. But we're talking about golf.
We are talking about golf, but let's talk about what's going on our Squawk Planet.
By the way, this is a big event too. We'll talk more. Go ahead. We'll talk more.
No, go ahead, Bex.
Well, it's a big event, and NBC actually started broadcasting this major, the Chevron, a few years ago. So, and I will say, guys, it feels like after all this talk about women's sports for so long, this feels like a moment where viewership is up, and as a result, sponsorship dollars are up. The purse for the Chevron is now $8 million. That's up massively from where it was just a few years ago. I think when Chevron took it over, it was around $2 million, and that was only 2022. They had one of the first winners ever of this event last night at a dinner I attended. She won $5,000 when she won back in the 1970s. So that just tells you how far things have come.
Yeah, a lot of money headed that way to women's golf. They have a U.S. They have an Open. They have a British Open, and then they have a tournament in France. We're from France. The Evian, I guess, is a major.
Yeah.
Coneheads.
Meantime, let's talk about today's Squawk Planner. Earnings season rolling on. We're going to hear from GM, GE Aerospace. We also got Verizon on tap. We're going to hear from Lockheed Martin. That's all happening before the opening bell. Tesla expected to report after today's close. A lot of people are going to be focused on that, and we're going to speak with an analyst about Tesla in just a few minutes on what to expect.
And Swiss pharma giant Roche says it's going to invest $50 billion where? In the U.S. over the next 5 years. The company saying the investment will create more than 12,000 jobs, including 1,000 with the company. The remainder to support U.S. manufacturing capabilities. Roche is going to inject cash into creating new research and development sites and expand existing manufacturing sites. And there's a new site in Massachusetts. It's going to be used for AI research. And once the new investments are complete, Roche said it would export more medicine from the U.S. than it imports. Every once in a while you hear things that, I don't know, seems like they're incremental moves that are positive from time to time. This is not a CHIPS Act. No way you're telling me this is a CHIPS Act Biden thing, okay?
Oh, but
you may say
from last week. Yeah.
Yeah, you may say this was already in the works. I don't know. You'll find something.
I just don't know.
You'll find something.
I'm not saying we just have to find out. Okay. Sometimes, occasionally, by the way, over time,
it might be good.
People do bring business back to the U.S. It's happened before. I think we just have to understand what it really is.
Let's hope it does, and it looks like things are working, and we say, okay, we're done.
We're done. Moving on. Yeah, we should also tell you. Oh, go ahead, Joe.
Oh, no, I'm done.
Okay.
I can't wait to get to Harvard.
We should also tell you
again.
Harvard suing the Trump administration following the White House freezing billions of dollars in grants that was earmarked for the school. The lawsuit accuses the administration of flouting the First Amendment and asks a federal judge to declare President Trump's freeze order unconstitutional. Harvard argues that the move was not related to anti-Semitism concerns that the administration has cited. That lawsuit, in part, says, make no mistake, Harvard rejects anti-Semitism and discrimination in all of its forms and is actively making structural reforms to eradicate anti-Semitism on campus. But rather than engage with Harvard regarding those ongoing efforts, the government announced a sweeping freeze of funding for medical, scientific, technological, and other research that has nothing at all to do with anti-Semitism. In a new statement, a White House spokesperson says taxpayer funds are a privilege and Harvard fails to meet the basic conditions required to access that privilege.
We should talk about this. The thing, and I don't know, Becky, how you feel about it, though, we've talked about the anti-Semitism piece of it for weeks on end. The truth is, if you look at what the government has said and what the president has said as it relates to Harvard, anti-Semitism is only a small part of it. What they're really trying to do is change the structure of Harvard and change who they hire, how they hire, what they do, and a lot of it has to do with ideological beliefs. And he has made it clear that it's actually in large part about ideological beliefs, about the professors that are being hired, the students that are being recruited, all of those things. That is where the free speech piece of this is complicated. That is where the free speech piece of this is complicated.
He's got about six things, at least 6 institutional entities in mind that he is not happy with and wants to disrupt, including media, including law firms.
Correct.
Including,
and I think, and we'll see what courts ultimately think, that perspective is not constitutional.
Not to say that I don't agree that the Ivy League and a lot of higher institutions have totally lost their way. I don't know if you can argue that on First Amendment grounds. They can say whatever they want. You just don't get any taxpayer money if you're going to do that.
But what you're doing by targeting in particular the science funding, the National Institutes of Health, the national science funding that comes through this, is potentially breaking down
money away.
Right, but by setting these things up that are completely unrelated, what it does do is threaten the innovative engine of this country. So many of the great developments have come through the funding that comes through these universities. And I can understand being upset with how things have gone, with how some of these universities are looking on the other side of things. But to do this and to put all of that at risk, by the way, a lot of these funds were set up from funds that were promised for last year. If it's not resolved by July, from people I talked to about some of these issues on the science side of things, it's going to create massive problems. You are going to lose all kinds of students and doctoral candidates and PhD work that's being done and some of the most innovative cycles that are coming through. And that is something that, again, you can look at this the same way you look at the trade war. Were there imbalances and things that need to be adjusted? Yes. Is there a better way to do it? Yes. Is there a way that might preserve these institutions and preserve the functions that are best about the United States to do this instead of breaking everything and saying we're going to shut this down now until we get our way with it? That is the harsh reality, and that is the fear is that you break things that can't be fixed easily by doing it this way.
Right. Amen.
We'll see. Anyway, when we come back, Tesla, the big name, getting ready to report after the closing bell today. A top analyst will tell us what to watch for. As we head to a break right now, check out shares of Meta Platforms. That company saw its 7th straight negative session yesterday. That's the longest losing streak in 2 years. Meta's down about 17% over that stretch. Squawk Box will be right back.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation, and startups from one place. CNBC.com/technology.
CNBC has the most affluent audience in television, and my job is to tell viewers how the wealthy make it, spend it, and give it away. I grew up in upstate New York. Both my parents were artists, so we didn't have money. But they taught me to appreciate beauty and also see things a little bit differently. For a lot of people, their ambition is to get wealthy. But money itself doesn't have any meaning. It's how you make it and what you do with it that gives it purpose.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, you know, injuries and worries and things that went on throughout my career, you know, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
CNBC is on assignment in Barcelona as Spain once again plays host to the Mobile World Congress.
We have all this kind of wildfires everywhere. You know, there is the need for data centers. There is the need for more computation power. There is this need for AI. There is the need for connecting the world to bring businesses together. There is the need for consumers to have faster access. And for all of this, you know, we are kind of firefighters trying to solve that problem, but we have a leaking hose here in Europe, because the regulatory environment is not fitting.
I think it has created a different thinking. The momentum's still there. Large language model continue to be prevalent.
AI is such a compelling technology. Every country in the world is going to pursue it. I think it's an imperative that the Western world lead in innovating in this new technology. That means investing in compute so we have the best infrastructure. It means investing in data so that the models can be trained in innovative ways.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange, CNBC.
How fickle some consumers are. They see something really neat or a cheap, a cheap Tesla or a FSD feature. I think that could be, that I don't know what the half-life on the brand damage is. All I know is that there's certain places where I live where I park in a parking lot and it's like, there's like 8 Teslas and then there's a space for me. It's mind-boggling. When people buy an EV, they buy it many times they buy a Tesla, and is that going to change?
Look, I think as far as leadership in the EV market, Tesla is clearly there. The opportunity for Tesla is they're really the only ones, at least in the U.S., that figured out how to sell EVs profitably. Everyone else has suffered with a lot of losses. So I think Tesla has an opportunity to continue to lead the market. I think it remains to be seen on the brand damage side, but I think you're right. I think we've seen over, the history of sort of market share dynamics for autos. Market shares will swing around, and I think, the thing to keep in mind is Teslas are actually relatively affordable. The $7,500 credit, which we expect to go away, is actually still in place, and that makes a Tesla today one of the more affordable vehicles in the market, especially if you're leasing it.
What would be a huge negative that could come out that we're not anticipating today? Maybe you could give me a huge positive. We've talked about the positives, but is there anything that could be way below what the street was expecting?
Well, I think that the question is really around the pace of recovery of margins. Margins have been under pressure for a variety of reasons. Discounting and costs and the volumes have pulled back. If they give any color that shows that the margins are going to remain suppressed, that's a problem. Just remember, we're forecasting margins of roughly 10% this quarter, automotive gross margins. That's 1/3 of where we were 3 years ago. We've seen massive margin compression the last few years. And I think if we're still sitting here looking at a limited margin opportunity, that's a clear negative.
Very good. All right, Dan, thanks. Time will tell. We'll know soon enough on Tesla, and then we'll know again in 3 months. That's the great thing about the way we do things. See you later. Thanks, Barclays.
Thanks for having me, Jeff.
Okay, you're welcome.
All right, GE Aerospace results are out, and Phil LeBeau joins us right now with more on what he's seeing with that. Good morning, Phil.
Good morning, Becky. This is a beat on the bottom line for GE Aerospace and a beat by a wide margin. $1.49 is what the company earned in the first quarter. The street was expecting $1.27. Revenue in line with expectations at just a smidge over $9 billion. The numbers within the numbers, operating margin of 23.8%, free cash flow of $1.4 billion, total orders up 12% to $12.3 billion, an 8% increase in inputs, services up 17%. Defense revenue up 5%, but it's the full year guidance. That may be a part of the reason why the shares are under just a little bit of pressure this morning. They are guiding to earn by the way, they're maintaining their full year guidance between 5 and 545. The street is at 542. GE Aerospace also expects to earn between 6.3 and 6.8 billion. And then just a few minutes ago, guys, I had a chance to talk with Larry Culp, CEO of GE Aerospace, and we talked about the outlook and the impact of tariffs. And he said, look, they are noticing higher costs. And so they are taking steps using things like foreign trade zones, moderating spending, and yes, pricing to offset those higher costs from tariffs. About $500 million is what they've been able to offset through these actions, and they'll continue throughout the year. But in terms of when you look at demand and what that market looks like, they are lowering their expectations for fleet utilization. Remember, the engines that are in service around the world, they are bringing down those departures, the number of departure cycles for those engines, bringing those down slightly as we see global aerospace trend a little bit lower for the remainder of this year. And they are expecting delayed service spare engine deliveries just a little bit under pressure, or actually they're growing those as expected. So as you take a look at GE Aerospace, they do beat on the bottom line by a wide margin, but they're noticing the impact of tariffs and higher tariff costs, and as a result, they are going to be taking steps like all manufacturers. Guys, send it back to you.
Hey, Phil, I think that's a big part of the question is American companies or companies around the globe can react and respond to the tariffs. But the uncertainty has been extended by this 90-day pause that President Trump has put in, where you don't really know what the tariffs are going to be, and it's hard to react to unknown policy. Like, you can make these moves, you can make these changes, but you can't when you don't know what the policy is going to look like.
Well, and in their case, what they've basically said, and Larry said to me, we are not going to wait for things to be finalized. We believe this is where the operating landscape, if you will, right now, Becky, they're taking the steps in order to mitigate the impact. Now, if they are fortunate, like all manufacturers, and the tariffs come back, fantastic. That's great news. But they're not going to wait to see that impact. They are taking steps now in terms of things like utilizing free trade zones, limiting spending, pricing where they have to. They're trying to control this as much as possible, like all manufacturers.
Yeah. Phil, thank you. It's good to see you this morning.
You bet.
Okay, coming up in just a moment, the FTC going after Uber for allegedly misleading users. We're going to bring you details on what's going on with that story right after the break. Do not go anywhere. Squawk Box coming right back after this.
CNBC. Live ambitiously.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
on the street. CNBC.
I've always had an ambition to do something I loved. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom when there's a big news day out there feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people because it empowers you with knowledge and with everything that you need to make the right decisions.
Access Middle East isn't just another finance show.
If you think about the UAE's trajectory, we actually think very, very long term.
It's a deep dive into the region's shifting power dynamics. What's different about Trump 2.0, particularly for the Middle East? Ambitious economic drive and the personalities pulling the strings.
Tariffs, trade wars, for whatever word you want to use. I think these are all challenging, not just for China, I think for the world.
Join me, Dan Murphy, for Access Middle East, your edge in Middle East markets.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Welcome back to Squawk. The Federal Trade Commission is now suing Uber. The government claims that the ride-hailing company provided misleading information to users about the Uber One subscription service, failed to provide a simple way to cancel memberships, and charged people without their consent. The move is the first FTC action against a major tech company during President Trump's second term. Notably, Uber and CEO Dara Khosrowshahi each reportedly donated $1 million to the president's inaugural fund. And Uber spokesperson telling CNBC the company is disappointed by the FTC's complaint, but is confident the courts will rule in its favor, Joe. So I think for all those folks who thought that,
That's not why. They could be just patriotic and want to participate in the inauguration of the U.S. president. Stop being so cynical. I'm going to start drawing a line at some of this cynicism, okay? We've got to move on. We've got to come together. We've got to come together. Yeah. We've been apart for, remember HW? Got to come together. Dana Carvey, we've been apart. Coming up.
Let me just tell you, I spoke to so many CEOs who wrote those checks.
And they wanted something?
Who will privately tell you exactly what they think, which is that this was a down payment. And all I'm suggesting to you is it was a down payment on nothing.
Because, it was a down payment on the rug being pulled out collectively from under them? Good. These corporate fat cats. The Academy Awards telling voters what they should be thinking when judging movies made with AI. That story's next. As we head to break, here's a look at yesterday's S&P 500 winners and losers.
I was an engineer at Lehman Brothers, writing trading systems, and 9/11 happened. That kind of changed perspective for me. It's also the same time my very close friend, and he decided to start this company, AppPoint, and pull me in. My name is Tianying Zhang. I'm the co-founder and CEO of AppPoint. I first came to Singapore in 2008 and really fell in love. Singapore is a place that is known for governance, stability, no drama. Quality education has always been top-notch. But what's different, I feel, in the last 5 years is that there are far more talent that's focused on technology. In conjunction with EDB, we have implemented this G2G program between Asian countries and Singapore. We actually provide these students real on-the-job work experience. So then after the education, they can go back to their countries and
they're like, oh, those answers they gave as they danced around whether...
By the way, I'm not arguing the answers or anything.
They're all gone.
I'm not, right, and that's the point. That may be the point.
Right, exactly. Those three are gone.
But if you were a free market guy, wouldn't you say that that's the point?
That they're gone.
They're gone.
Yeah. And this same thing's happening now.
And by the way, the one thing that Republicans generally hate is government picking winners and losers, and that's what's happening here. The government has decided, it was like Andrew said, if they just said, we're not in this business, they're going to pick the things they don't like.
Make it impossible for Jewish kids to go to class. That's all you got to do.
But that's not what, if you go and read the letter, read the letter. That is not what they're asking for, my friend.
They've thrown some bells and whistles on.
Bells and whistles, it's like anti-Semitism is one item, and then there's like a list of 10 others that have nothing to do with that.
There's a wish list there to try to, in one fell swoop, and reverse what's happened to our universities over the past 50 years, which is a good idea.
But that is the conundrum here, because they're asking for all these other things that may very well be legal.
It might be.
Because they're ideological.
No one's telling them not to do it that way. It's just if you're going to do it that way, you're not getting taxpayer dollars.
But taxpayers get a lot of that money back. Right? Really good companies and products come out of tech and research that's done at universities.
Okay, so should we do 10 times as much?
I don't know, but we can argue over taxes.
We're going to have a tax fight later this year. If it's up 30 times in value, then I don't know. I'm just...
Well, the market's up 30 times in value. Do it that way.
No, this is inflation adjusted. It's up 30 times what the taxpayers fund at these elite universities that have $60 billion endowments.
And look at the growth of our economy.
Well...
During that period, do you think it's related at all?
I don't know. Do
you think universities do anything?
If a person is raised with milk, are they more prone to use marijuana? I don't know.
I don't know.
I don't think there's private money for the stuff that's being cut, and you can argue, what's important and what's not. But you don't know where research is going to go, and just politically, the idea of the government. I mean, like, how big a deal was Solyndra? Remember this for Obama? Like, you can't pick winners and losers. I think that's politically problematic for them. That's what they're going to be doing.
I'm sure there's a middle ground somewhere that with Harvard that will allow this to be settled. And like so many things, the first offer on either side is, you're trying to move somewhere to the middle with this.
But do you think that's appropriate? That's the question.
I don't know. So you think that Columbia and the ones that knuckled under are all a bunch of pansies for not standing up for what they believe?
They were asked for actually less. First of all, they were asked for less. What their asks for Columbia were very different than what they were asking of Harvard, just to be straight with you. You should really go read what they were asked to do. And you would think a little bit differently of the two things.
What they're asking Harvard to do, and it may not be feasible. It's kind of a wish list, as I said, and it's a wish list that a lot of people have some empathy or sympathy for.
Right, but that's
for what's happened.
But that's like saying that there's a group of people that would prefer that, like, all we do is talk about the king in Washington, and that's the conversation they'd like to see at the table, and therefore we should have that conversation every day because the government's decided that that's what it should be. I mean, that's the part that I don't understand. By the way, the government regulates the FCC, there's the FTC. Look at what's happening. Look at what's happening around the country.
I want you to show the same fervor and zeal with Linda McMahon, because she'll
I'm
tell
happy
you exactly.
Tell us about what's going to happen today, or yet tomorrow. Sorry.
Starting tomorrow, we've got more than 100 CEOs, policymakers, government officials around the world, including in the Trump administration, and we're going to interview them and ask, how is this going? Like, genuinely, how do they think this is going? And I think the gap that I hear a lot about from CEOs between what they feel they were promised in some way and what they are getting is very wide. I mean, you mentioned the FTC, that suit against Uber. You read that thing, and that could easily have been brought under Lina Khan.
Totally.
And so I think they are getting the kind of destabilizing, norm-busting Trump that they didn't want, and none of the offsetting, norm-busting Trump that they did. And so that's a real reset.
Liz Hoffman, good luck. We're excited to watch the conference, and we will, I'm sure, be talking about all the headlines that you generate.
Thanks.
Thank you. We've got one headline that's just come out literally as we've been speaking. 3M just out with its quarterly results. Earnings coming in at $1.88 a share, 11 cents better than estimates. It's on revenue of $5.8 billion, also ahead of expectations. The company updated its full-year guidance. It says the tariff sensitivity would knock 20 to 40 cents per share off of its annual profits, Joe.
Coming up, we're going to speak with LPGA star Stacey Lewis and Hall of Famer Amy Alcott ahead of the first LPGA major of the year. It's now the Chevron. This will be the Dinah Shore. That conversation is next. Squawk Box will be right back.
CNBC. Live ambitiously. Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wish we could just follow the markets and talk. My ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home.
If you drink the Vietnamese coffee, you can recognize the difference in the Vietnamese Robusta beans. It's a very strong, very resilient beans. Bitter.
I think it's quite hard to the foreigners to imagine what they have in Cơm Tấm. You can find a lot of different kind of seafood here because we have a long coaster. It's like the time when you feasting and socializing with your friends and family. 1, 2, 3, go! Join me during my downtime.
Scott Wapner from the NYSE. Closing bell, CNBC.
Welcome back, everybody. We are here today in Houston ahead of the Chevron. That's one of the major championships on the LPGA Tour, the first one. We're also at a Chevron Leadership Initiative event on women's sports today. And joining us right now to talk about it is LPGA athletes Stacey Lewis and Amy Alcott, who is also an LPGA Hall of Famer. And ladies, welcome. It's really great to have both of you here today.
Thank you. Great.
I feel like we've been talking about for decades about how this is the moment for women's sports. But I have to say, as somebody who's watching from the outside, it really feels like now is the moment. There is a critical mass of audience. The sponsorship dollars have followed, and I think that makes all the difference. But I would ask you guys on the inside what it really feels like. Amy, why don't you go first? Because you won this tournament for the first time in 1983, the first time it was actually a major on the LPGA Tour.
Right. Well, Becky, you know, you're so spot on. You are so spot on. If you can't market and sell women's sports now, you'll never be able to. It's like, it's this whole sense of timing, and it's been a gradual move in that direction with women's sports. But now you've got bona fide stars in the game, the Nelly Cordes, who's the modern day woman athlete, Caitlin Clark, and all kinds of great players that are just playing such great golf and are just have a great spirit about them. And I think that it's growing. The audience is impacted by it. They love seeing women compete like this, and they seem to be embracing it more than they did. And when I was playing it in the 70s and 80s, 90s, it just seems to be where it's all happening.
Yeah,
and these marketing dollars are following it.
Mm-hmm. They are. And Stacey, you're on the tour now. You've won this tournament in 2011. You're playing this week at the Chevron too. I think what's amazing about it is the purse is now $7.9 million. This is up from, I think, the winner of the very first tournament of the first Dinah Shore won something like $5,000. You're talking about real money. And that means people can make a living on this.
Correct. I mean, you look at our purses. I mean, we're 75 years in of the LPGA, and so, which is pretty amazing. I mean, not a lot of people know that we're the longest running professional women's sports league, and, our purses have risen. You've got these big corporate companies that have said that we want to invest in you, and here's why we want to invest in women's sports. And we're kind of at an inflection point now where it's, okay, we've gotten these great purses. Now we got to increase the exposure. We got to get more people watching us. We got to get more people at the tournaments, and you're seeing that happen in the other women's sports right now, which is, you've got, ESPN that got the WNBA on TV. Right. You've got these things that are happening in women's sports, and golf's over here kind of saying, hey, what about us? And that's what this week is about. That's what today is about with this conference and this summit, is how do we get the right people together to really move this tour forward.
Well, you are somebody who has played a very important leadership role, the Solheim Cup, where you were the tips.
Yeah, I just constantly had the players in the know of what I was working on behind the scenes, and they didn't need to tell me anything. They didn't need anything back, but you have to make them feel engaged and a part of the solution. Yeah. And I think going forward, the players have to be a part of this. The players are part of the solution. They're the ones, back in Amy's day, they sold the tour. They went, and you think way back to our founders, they went to sporting goods stores and gave tickets out and sold tickets to try to get people to come. The players really have to be engaged and involved in this, and that was what I did with Solheim, just to make them feel a part of the pairing discussions and, kind of everything that was going on. And because when you care, it makes the golf a lot easier.
Yeah, and the players are the ones who have the followers. They're the ones who have the brands that come into this. Amy, you were the first one to jump in Poppy's Pond. I guess it was 1988. You won in 83.
Of excitement.
Yeah, what happened? How'd you do?
I won in 83. Everybody wanted to play in this tournament. It was like the precursor to greatness, the Dinah Shore, the celebrities. Everybody wanted to be eligible to play in this tournament. I was lucky enough to do it my first year on tour, win a tournament and get in to play in back then, the Colgate Dinah Shore. And then I played every year, and in 83 was my year, and I won then, had a great win there, and it was exciting to meet Dinah Shore and Bob Hope and Frank Sinatra and be a part of that. And that event was ahead of its time. I was just telling Stacy, that event was ahead of its time. And now Chevron has kind of taken the lead, and there were other sponsors along the way. But in 88, it was just a total moment of excitement, and I just looked at my caddy and I said, we're going in the water. Lest I know it would be such an amazing, iconic moment, showed on SportsCenter and all of this stuff. And we just went in and the crowd went crazy. And then Dinah Shore was jealous of it. And she says, well, you got to win that tournament again, and I want to go in with you. And so in 1991, how many people win multiple times? I was lucky to do that. And then I dragged Dinah in there, and we started the whole robe. You have to wear a robe, and she had, it was just very exciting. But let me just interject one quick thing. The old adage has always been women's sports is sold and men's sports is bought. That was